lightning cracks across the global financial skyline. Markets are tumbling like dominoes, panic flooding trading floors from New York to Mumbai. In the eye of this storm stands one defiant architect, President Donald Trump, unleashing a sweeping wave of tariffs, the likes of which the world hasn't seen in nearly a century. These new duties, sweeping across more than 90 countries, have sent investor confidence plunging and hope fracturing. This isn't just trade policy, it's the ultimate financial thriller, and you're about to experience it. It began with a surge of shock and disbelief. On Liberation Day, April 2nd, Trump declared broad-based tariffs, 10% across the board on imports, with harsher reciprocal levies aimed at trade-heavy nations, 34% on China, 20% on the EU, 24% on Japan. Immediately, global markets responded in kind. The S&P 500 plunged nearly 5%, Dow futures dropped nearly 3%, Nasdaq futures tanked almost 5%. In Japan, the Nikkei fell nearly 3%, and Europe's DAX and CAC 40 took staggering blows of around 3% each. Futures contracts tripped circuit breakers as trading spiraled out of control. The crash widened. On April 3rd, the S&P 500 suffered a historic loss, over 270 points, nearly 5%, while the Nasdaq endured its largest point drop in history, and the Dow slumped nearly 1,680 points. The markets were in freefall. This was the darkest day since the COVID crash of 2020. Investors flocked to safety. Gold surged as anxious buyers turned nervous capital into tangible assets. Yields on government bonds fell as investors embraced fixed income havens. The yen and Swiss franc climbed, safe havens in currency chaos. Then came a brief reprieve. By April 9th, Trump paused further tariff hikes, excluding a freeze on China-targeted duties. Markets rallied sharply. The S&P 500 staged its largest gains in years, turning positive for the year by mid-May. Yet, the recovery was fragile amid lingering uncertainty. Fast forward to August 2025. The tariffs returned with renewed ferocity. On August 7th, Trump formally enforced new duties on over 60 countries and regions, average import taxes soaring to their highest since 1933, roughly 19%, with targeted levies of up to 100% on chips and pharmaceuticals. The EU, Japan, South Korea hit 15%. Taiwan, Vietnam, Bangladesh 20%. India, already facing pain, was hit with 50% amid rising geopolitical friction over Russian oil imports. Markets brace for impact again. On August 7th, U.S. equity markets sagged under the weight of the tariffs, alongside concerns over Federal Reserve independence and possible political interference. Central banks were caught in a squeeze. While the Bank of England surprisingly cut its rate to 4%, inflation fears lingered. India's markets were rocked. On August 8th, the Sensex fell over 500 points, and the Nifty dropped below 24,450, driven by tariff pressures and foreign investor outflows. IT heavyweights led the declines, and the rupee weakened sharply against the dollar. India faces a multi-front backlash. Moody's warns the 50% U.S. tariff could shave 0.3% off India's GDP, a heavy blow given the country's growth aspirations. Electronics, auto parts, jewelry, seafood. The list of impacted sectors reads like a national alarm. The seafood industry alone risks losses exceeding 24,000 crore rupees, roughly $2.9 billion, and job cuts and rupee depreciation loom. The World Trade Organization weighed in. Revised forecasts now see global merchandise trade expanding just 0.9% in 2025, down from prior expectations of 2.7%. The aggressive U.S. tariff wave is dampening global trade recovery and potentially threatening further fallout into 2026. The political chess game intensified. Trump's administration defended the tariffs as bold steps to reduce the trade deficit and bolster U.S. economic sovereignty, touting an estimated $50 billion per month in revenue. Some tech firms received exemptions, but many industries, from automakers like Toyota and Honda to fashion brands like Ralph Lauren, began passing higher costs onto consumers. Tariffs as geopolitical leverage. Rather than traditional tariff negotiations, Trump has weaponized tariffs to achieve political ends, imposing heavy tariffs on countries like Brazil, Switzerland, India, and Canada for stances unrelated to trade, while granting last-minute relief to favored allies like the EU and Japan. The uncertainty is destabilizing long-term trade ties, from meltdown to moment. What started as a financial shock has become an ongoing saga of high-stakes geopolitical theater. Markets might stabilize or cave again. Central banks are juggling growth and inflation, governments scramble for trade reprieves, supply chains falter, consumer prices tick higher, and the gold rally continues. The aftermath of the tariff shockwave spills over. Suddenly, the world finds itself entering an inflection point in economic history, a landscape where the fragile global architecture of trade and growth is tipping toward fragmentation. The International Monetary Fund slashed its global growth forecast to just 2.8% for 2025, citing U.S. tariffs, policy volatility, and geopolitical fault lines as destructive forces reshaping the system created after World War II. The IMF warns that these moves have more than halved expectations for global trade recovery. In boardrooms and parliaments, economists describe a decoupling world, one splintering along national, regional, and political lines. Beata Javorchik, chief economist at the EBRD, predicts faster fragmentation of the global economy, fueling a resurgence of protectionist industrial policies around the globe. Firms are freezing investment amid uncertainty, and alliances once underpinned by trade are cooling. The costs are mounting, in more ways than one. Bold projections from the Penn-Wharton budget model show that Trump's April 2025 tariff wave could slash GDP by up to 6% in the long run and cut wages by 5%. For a middle-income household, that adds up to a staggering $22,000 in lifetime losses. Meanwhile, tariffs aren't a clean economic tool. They're a stealthy tax, especially hurting everyday Americans. The ISSF reports that the burden falls hardest on low and middle-income households, who spend a greater share of their income on imports like food, medicine, clothing, and appliances. These tariffs could cost a typical household nearly $7,000 annually, a transfer from the many to the few, a regressive blow disguised as economic populism. In emerging markets, the fallout is catastrophic. For export-dependent countries like Cambodia or Vietnam, where U.S. markets are critical, steep tariffs threaten entire industries. Economies with far fewer buffers than the U.S. stand to see development reversed, poverty deepened, and investment stalled. Ports are surging, then grinding to a halt. Oakland's imports spiked 31% in July, a frantic rush to beat the tariff clock. But analysts warn that these front-loading frenzies presage trade slowdowns in coming months, signaling deeper economic shifts. On the corporate front, companies across the world are bleeding. Caterpillar reports a 6 to 7% cost surge. Molson Coors faces $35 million in aluminum tariff costs. Collectively, global earnings dropped by $15 billion. And while the S&P 500 rides on tech strength, many sectors are under pressure. Wages, jobs, and the labor landscape all feel the turbulence. In July 2025, U.S. job creation hit a shocking low, only 73,000 new jobs, far below expectations, with significant downward revisions to prior months. Manufacturing, among the hardest hit by rising input costs, is stalling. In response, Trump fired the Labor Statistics Commissioner, raising red flags about data independence and the storm ahead. Looking outward, global trading structures are splintering. Economists foresee regional blocs taking shape. Asia, BRICS, and EU cornerstones forging alternative frameworks to break U.S. dominance. Supply chains are being rearranged. Reshoring becomes a trend, but often at the cost of efficiency and quality. The global economy stands at a crossroads. Will this latest tariff onslaught solidify a new financial order or ignite dangerous backlash? As markets teeter, governments shift, and everyday lives feel the pinch, one truth remains. In today's high-stakes chessboard, tariffs are more than taxes. They are thunderous declarations in a battle for economic power. The real question is this: will the world adapt or break under the pressure? So here's the burning question. Will this bold and brutal tariff offensive fortify the U.S. or fracture the global marketplace it relies on? Will hasty diplomacy patch cracks, or will fractured supply chains, rising prices, and fractured trust writhe into something deeper, something toxic? Hit that like button if this electrifying journey gripped your attention. Share this, because everyone needs to know not just that markets are shaking, but why. Smash that subscribe button, because the next chapter in this global drama may just redefine the world as you know it.